Welcome back. Well, not much change at the index level, still around 19,790 thereabouts. The Bank Nifty is holding on with a gain of 100 points, and the broader markets too are a bit muted. On the losing side, it's BPCL down 1%, LTI Mindtree is coming under pressure, down about 0.7%. Larsen & Toubro is trading with a bit of a red tinge. NTPC, SBI, these are some of the other names which are actually in the red. On the gaining side, however, it's metals all the way. So Adani Enterprises, Hindalco, JSW Steel, these are the stocks which form part of the metals basket, and all of them are actually holding up in the green. What else is happening in the market? Well, of course, a lot of IPOs lined up, and that's something we'll discuss with our guests as well. First up, let me welcome on board Sudip Bandyopadhyay to talk to us about the market. Sudip, let's discuss Tata Tech, right? The IPO will open on November 22nd after a hiatus of almost 18 to 19 years that we have seen from the Tata stable. The IPO price the price band has been decided at 475 to 500 rupees. And despite that, the implied valuation turns out to be around 20,000 odd crore rupees, if I remember it right. Even if you look at valuations, Tata Tech's valuations are around 25 to 30 times forward earnings, and that compares with an L&T Tech, which is upwards of 35 times, KPIT Tech, which is trading at 60 times forward earnings, and Tata Elxsi too, which is close to 65-70 times. Tata Tech, what's your view, Sudeep?
Well, I'm extremely positive, Anisha. I think this is, as you rightly said, coming from the Tata stable after a gap of about 20 years. And forget this history. Look at what the company is focused on. Company is focused on the two of the most exciting trends at this stage. One is transition from internal combustion to electric. That's as far as the automotive part is concerned, and also going forward, self-driving cars. This transition, they are very much a part of pretty much all the major automobile companies, and that's one area which everybody is talking about. This is the biggest thing which is happening in the automobile sector. So obviously they are going to benefit out of this transition, and they are already working with companies like, of course, Tata Motors, Vinplast, which is one of the largest Vietnamese EV manufacturers. Tesla, they have a tie-up with, and so on and so forth. Apart from this, the other segment which they are focusing and now on is aerospace. Now we know this is another industry which is booming, and there is talk of space travel and private space travel and whatnot. Under the circumstances, this is one other area where there will be significant demands going forward, and Tata Technology is involved in that segment as well. So both the segments, dominant segments where Tata Technology is involved, is supposed to be and is actually exploding at this stage. So obviously Tata Technology will benefit of credible management, fantastic track record, and a great parentage, of course, does benefit. And you already talked about the valuation. The valuation at which it is coming is also very reasonable if you compare with any of the reasonably alike peer.
Also some of the other stocks that are buzzing today is refractory stocks that have been buzzing, whether you look at an IFGL Refractors, Vesuvius India, RHI Magnesita. Why are they buzzing in state? What is the news flow? Why the rally? Sharad is here to decode all these details. Sharad?
In focus, we are having Rallis India, and what we are hearing from the dealers is smart money buying is happening in the HNI segment for this counter. If you look at the volumes also, it's coming at almost 20 times its 20-day average, and importantly, the stock has risen its most in the last 10 months. The key DIs already invested in the stock include the names of SBI Mutual Fund and Nippon India Mutual Fund. We did a couple of channel checks as well, and agrochemical stocks are in focus as smart money is moving into these stocks. The risk-reward ratio remains favorable, and the channel checks suggest that the excess inventory issues have been sorted. It's expected that the H1 FY25 numbers will be strong going ahead as well.
Sure, point taken. We did speak with the management of RHI Magnesita. They were talking about how demand is at a 15-year low, but the company has managed to improve their capacity utilization. Naresh, just tell me on the charts, in terms of any of these names, is there any buying opportunity?
So RHI Magnesita looks a stock which has been sideways for quite some time. But if it can start sustaining above 730, that would be interesting. Being sideways for almost now 6 to 8 months, available at the same prices where it was in 2022. So on radar, but if it needs to have some more price action beyond 730 to get excited.
Okay, need some price action. But Kunal, you have any view on any of these names? Do you like any of these names coming in, whether an IFGL, Refractors, Vesuvius, anything that you would like from this one?
No, so I think RHI Magnesita is something which I think looks attractive from the lot which you mentioned, Vesuvius, etc. Are the ones which I don't track. But I think RHI Magnesita has come back above the 200-day moving average. I think the last 3 or 6 months, the stock had gone through a corrective phase from 800 odd levels towards a point when the stock was almost at 500, 550 mark. Even in the last 1 month or so, the stock has recovered from 610, 600 odd levels to now 660 or 700 plus mark. So that's something which is very interesting for the stock price, and looks to be that the stock is now heading towards or inching towards a breakout. That's a stock which I would recommend, possibly even at current levels.
Okay, point taken. In fact, let's go back to Sharad to get the chatter from the dealing room, because it looks like Rallis India is in focus on account of some fresh HNI buying that we have seen. Sharad, tell us about that one as well. Okay, I think we'll try and get Sharad on board to talk to us about the dealing room chatter, because Rallis India is one stock that was of course seeing quite a bit of HNI buying. It's risen the most it has in the 10 months gone by, and the volumes are also quite impressive at 20-day the moving average. The key DIs which are already there in the stock include names like SBI Mutual Fund, Nippon India Mutual Fund. So these names are already there. Plus we are seeing some sort of buying traction come by, and even if you look at the channel checks, there's excessive inventory which was there in the system. That's getting abated now. We have seen strong performance from some of the domestic players, and the risk reward ratio as per analysts now look favorable, and Rallis India is in focus on account of that. Naresh, come in on the chart check of this one.
So Rallis India has been one of the worst performers in the basket, and the stock has gone nowhere for the last 8 to 10 years now. The stock used to be this 200, 220. Back in 2014, it used to be 150, 160, even in 2010, 11. So the stock has gone nowhere. The only trigger which has come in the last few months has been the fact that promoters have increased stake from one of the investors. The stock has been sideways for pretty long. Today, we've seen the first price action. But overall, seems like the stock is consolidating for an eventual breakout going forward. And the whole agrochemical basket as such has been in a downtrend. In that sense, the stock has been sideways for the first time. Otherwise, the stock generally tends to be much more worse than the sector. So watching it out, once it starts sustaining about 240, that would be an indication as a longer term trend change. It could be a preemptive buy here and accumulate at 210 to 230 levels with a longer term view.
So that's a view coming in on Rallis India. But the other headline that we are just getting is from CIT talking about how the entire wedding market is likely to pick up, and that's the reason they are expecting good amount of momentum as far as some of these sales are concerned. In fact, the wedding season ahead, they're talking about 38 lakh marriages happening in India in the next few months, and that is likely to bring in 4.74 lakh crore worth of revenue churn in the market. So that's the headline that we are getting. Of course, Titan today is in focus as well. That's crossed the market capitalization of 3 lakh crore. So that stock continues to be in focus. And if you look at the momentum that we have seen in Kalyan Jewelers as well, that stock has been trending higher as well. And we'll pull up all of those charts for you. But in the meantime, let me take this question to you, Sudip. The entire retailing space, the premiumization wave, Vedant Fashions of the world, they are all doing quite well given the kind of uptick we are seeing in this discretionary spend.
Yeah, absolutely right. I think, and this marriage season, you should also add probably Raymond to this. They have also launched an ethnic range to compete with Vedant Fashions. So I think this space is exploding really, and we are extremely bullish on Kalyan Jewelers as well. Titan of course goes without saying, but Kalyan is also doing a lot of things right. Their expansion is happening rapidly, and we have to remember that they're expanding in northern market and eastern market where the margins are much higher. They are also using a less capital intensive model for expansion, which is partner based. And the same model is being replicated in West Asia as well. So overall, we expect margins and return on equity to improve significantly for Kalyan. So definitely for a medium to long term, Kalyan can be looked at. As far as the other names you mentioned, we like Raymond's. And a lot of noise going around in Raymond for multiple reasons. But the fact remains that the core business post exit from consumer items, which is really FMCG kind of items, I think is the business looks strong and can be picked up for a long term at current level as well.
come to you also. Titan obviously trading at all-time highs, at crossing the 3 lakh crore market cap as well. What is your view on Titan or a Kalyan? Which one would you pick right now, or would it be both in your list?
So both of them are different stocks. Titan is more stable, of course, a large cap name, a Nifty 50 stock. And I think in that aspect, it's something which we would probably like to trade more often, because the stock has this periodic tendency of going into a correction. Last month or so, for example, Titan had come back towards 3,100, 3,070, 80 mark after a corrective wave, and from there it started to show signs of recovery. In fact, in this last 2-3 months of price rally and then a correction, it's come out of a major consolidation, which is almost like a 300 to 250 to 80 point consolidation for Titan. So what we are looking out for is from the 3,300 mark, we could be looking out for maybe 200 to 50 points on the upside. That's around 35-50 mark as a potential target range for Titan. Kalyan Jewellers, on the other hand, has been an exponentially moving stock. So it's a high beta name, tends to get into those odd phases of very sharp correction every time the stock gets into an overbought territory. So I would probably be of the belief that we'll wait out for a correction for Kalyan Jewellers, and in case if it corrects back towards say another 10% to 15% lower from current levels, that could be a good starting point.
Sure enough. Sudip, what's your view on the metals basket? Would you call these moves transitory, or is there some money to be made here?
Well, I'll be extremely careful, Anisha. I think there's some excitement building up because China is making the right noises, and expectations are that metals demand will pick up once again in China on the back of supportive government policies. But I think we have seen this movie too many times. Let us see things actually happening on ground in China, real pickup in metal demand, and only then I think I will venture into this. One has to remember when dealing with metals is that this is an extremely volatile space, and if you are buying into these stocks, you have to be ready for volatility. This is not for the faint-hearted, and more and more we get integrated with the global world, more and more volatility seeps into our metal stocks as well. As far as the entire pack is concerned, if I have to pick one stock, I think I'll go with Tata Steel. Fundamentally, a lot of right things are happening. The challenge in UK, I think, is to a great extent thing of the past. The loss they have booked in last quarter, I think, takes care of the entire, the challenge or problems they had. The support of UK government should, and the change of the production agreed method of production will ensure profitability comes back to the UK operations. Indian operations, of course, are very efficient and profitable always, and the margin is improving. So if I have to buy one metal stock for long term, I'll buy Tata Steel.
So that's a take coming in. But Sudip, if I had to give you a blank check right now, which stock would you prefer to buy? Give me one name.
If you give me a blank check, I think I'll go and buy Reliance Industries. I think there is some research report also which came out today or yesterday, which tries to explain why there is investors are not looking at Reliance Industries at this stage. But the fact remains, I think there is a tremendous value unlocking, and there's exponential growth potential in this particular counter. It has moved up a little bit post that report today, but I think we are seeing the trailer. The retail is one giant sitting inside Reliance Industries. So is the green energy business, alternate energy business, and a similar thing I can say about the entire telecom space. So there are these three new pieces. Why new? These are reasonably well established, both retail and telecom. Green energy is definitely new. The traditional business, where also things are improving and looking up. So I think it deserves a much better valuation. So I'll definitely go and buy Reliance Industries if I'm given a blank check.
Given a blank check, Reliance Industries. Anisha, I think if you give me a blank check, I would take all the holidays possible, keep encashing that much amount.
Then we'll buy Thomas Cook and the other companies, Eastman,
you can do that. Yeah, you can think about that. But I know what I'm going to do if you give me a blank check. Huh? But the centre has written to the state chief secretaries to get all vehicles on road insured, and over 54% of the vehicles on Indian roads are uninsured. ET-Now's Anurag Shah is here, joining in with us to give us more details on this. Anurag?
So it's a very big development for non-life insurance companies. DFS Secretary has written to Chief Secretaries of all the states, and it has been instructed that the Chief Secretary should ask the State Transport Department to have a comply of uninsured vehicle, because as presently there are around 16 crore vehicles running on roads are uninsured, which is around 54% of overall vehicles of the country. So chief secretaries have to ensure that all the uninsured vehicles get insured, and for that it has been allowed that the National Informatics Center has the data of all the uninsured vehicle on pan-India basis. That data is available with National Informatics Center. So State Transport Department has to take that data, and the State Transport Department will be sending notices to the owners of uninsured vehicle. So in a way, two major developments will happen. On the other side, more number of uninsured vehicle will come under the gambit of insurance, because the third-party motor insurance is mandatory as per the Motor Vehicle Act. Each and every vehicle running on the road has to have mandatory third-party motor insurance. So GST revenue will also, government will get GST revenue also, because on motor insurance there is a 18% GST. On the other side, for uninsured vehicle, if the penalty is there, 2,000 rupees penalty is there for uninsured vehicle, so government can get a revenue from uninsured vehicle also. So major development for non-life insurance sector, where there is a mandate from Government of India to get uninsured vehicle under the gambit of insurance.
And Anurag, thank you so much for that. Since you've talked about this story, we have seen a momentum build up for all of these non-life insurers, whether it's a GIC, whether it's a New India Assurance. They have all perked up because you're talking about a huge market that opens up. Only 54% of the vehicles are insured at the moment. So, of course, there's huge potential for growth as far as this is concerned if all the motor vehicles in the country are to get insured. So, both GIC as well as New India Assurance, both the stocks are actually trending higher. Separately, the other space that's doing well is the cables name. So, RR Cable is up around 9%. KEI Industries too is holding up with a gain of around 8%. Kunal, your view on these stocks? RR Cable, I understand you will have limited history, but at least KEI Industries and the other broader market cable names? Yeah, so I think even with the limited history for RR Cable, I think it's a very good buying pattern, because the stock has been moving on the back of some extremely strong volumes. There was such a similar volume cluster on the higher side for RR Cable just about, I think, a couple of weeks back, when it moved from 1400 levels, 1420, 1425 to 1650 odd mark in a matter of, I think, 3 odd trading sessions. So I think it's trying to develop a nature of moving on the back of higher volumes in a matter of 3-4 trading sessions, and then going for a bit of a consolidation which lasts for at least a couple of weeks for the stock. KEI also, on the other hand, the stock has been looking quite strong from a longer term perspective. I think quarter on quarter as well as on a year on year basis, I think the stock has done exceptionally well for itself. So it doesn't come as a surprise that both these stocks are making new highs, specifically KEI Industries. Sudip, what's your view? Is this a better way to play the entire real estate theme through the building materials, through consumer durables, cable companies?
Definitely, building material is a segment which is in big demand, and there has been explosive growth in pretty much all the other segments. Whether you look at the cables, pipes, cement, plywood, sanitary ware, I think all these are definitely worth looking at. The only thing you have to do is figure out the right valuation at which you want to enter, and look at the the growth path which is still left. I would tend to think that it's safer to play through either cement or cables. Both are looking good. As far as cement is concerned, we like Ultratech Cement, the industry leader, and some of the smaller cement companies which are in central and northern part of India, where there has been possibility of price hikes and a little bit of demand supply gap, where the supplier, which is the cement manufacturers, benefit. So some of these smaller companies as well as Ultratech. As far as the pipes, wares, and this segment, we like Welspun Corp. I think this is one company which has moved up in the recent past, but not as much as other companies in similar businesses. And the way the market is explosively growing, both as far as construction, Nal Se Jal scheme of Government of India, and Har Ghar Jal. So all these schemes does help the pipe manufacturing companies, and this is one of our favorite picks in the industry.
Right. Naresh, let's come to you. What is your BTST trade for today?
So continue to like Bharti Airtel, which has given a breakout and followed up into new all-time high. Stop loss at 967, target price of 990. Second is a buy on Ashok Leyland, which has seen good volumes in the last 1 hour. Stop loss at 175, target price of 182.
Right. And Kunal, your BTST trades?
So I'll go with IEX as the first stock as a buy. Classical breakout today, and a stronger degree of momentum finally after quite some time. So would look out for 155 as a target, stop loss 134. And the second would be New India Assurance after such a kind of a strong up move, and of course on the back of news flow looks very attractive. Would look out for targets of 180 and stop loss at 155.
Sudip, what's your view on Honasa Consumer if you track this one? And let's put Nykaa in the same basket. Have you been tracking these two companies? Any recommendation here?
I will be a little careful, Anisha, on Honasa, predominantly on the fact that the valuation at which it got listed and where it is trading. I think there is a lot being expected out of a new brand, and a lot is being expected out of other brands other than Mamaearth to deliver, to arrive and sustain at that kind of valuation. So I'll be a little careful as far as Honasa Consumer is concerned. As far as Nykaa is concerned, I believe that there is a rationale for this to break out now. All the other new age companies which got listed around the same time, we have seen massive price up move in the recent past, whereas Nykaa has by and large stagnated. As far as the business is concerned, I think a lot of positive developments are there in Nykaa, and I definitely believe that at some stage Nykaa will break out. Now, whether that will come very soon or within 2-3 months, it's very difficult to predict. But by and large, fundamentally, I believe Nykaa deserves a better valuation, and I will definitely go for Nykaa as opposed to Honasa Consumer.